Hey guys, welcome back to the channel. This is Future Trading with Mike, and thank you for joining in this morning. However you came across the video. If it's your first time watching one of the videos and you haven't subbed or subscribed yet, please take the time to go ahead and subscribe to the channel. I definitely appreciate that. And for those who have subscribed, thank you for doing so and liking the videos. Make sure please make sure to hit that bell icon. Make sure if you haven't, if you already subbed to the channel and you haven't hit that bell icon, post notification, go ahead and hit it so that way you may be missing some of the uploads. And that way it will ensure that you never miss the uploads. Okay, same thing for those who came across the video for the first time today. Hit that red button, that subscribe button. Make sure to hit that little bell icon, that post notification, to make sure that you just as well do not miss any of the uploads. Okay, today is a non-trading day. It is Sunday, the 27th of February, getting ready to close out the month. And today I want to talk about a topic, being that it's a non-trading day, but I get a lot of questions kind of centered around this topic, and I recall even when I was a beginner or learning to trade, it was a question that was always in the back of my mind. And I'm sure if you're watching this video and you're starting your journey or trying to establish a career in learning how to trade, well, here's the question. The question is, how much money do I need to start trading or day trading with when it comes to the futures markets? Because every market is actually different, meaning every, I guess, asset class, or whether you're trading stocks, futures, options, whatever it is that actually forex, whatever it is that you actually trade. But this is more so for those that are trading futures, pretty much, because I'm a futures trader. And even if you do trade a different, market, stocks, forex, whatever the case is, maybe this is beneficial to you as well. So, however you came across the channel here today and watching this video, I appreciate that. So yeah, how much money do I need to start trading with, pretty much? And I am a futures trader. I like trading the Emini futures, particularly the S&P 500 futures, and I gave my spiel time and time again about why I trade that particular market, because the tick value is higher. And even though it's a slower, thick market, thick means a lot of volume. It's one of the future markets that has the highest amount of volume traded daily, and it probably is the market that has the highest futures market that has the highest amount of volume traded daily. So it does make it a little bit more difficult, and a lot of people shy away from it because of the fact is how slow moving it is. In most instances, it likes the range, okay, and making it difficult. Kind of stays within a range, and most people like to see swings when they trade. So swings up, swing down, swings up, swing down. So swings down, market swinging down, pulling back up. So it gives them a lot more opportunities, and looking for maybe their setups, whatever the case is. But you see that I trade every single day. You guys can go back and watch my channel. I think at this point I probably have about 160 videos on the channel now, so I have tons of content on the channel that you guys can go back and watch. I live record my trades every day, or record live my trades every day and post them to the channel. And so let's talk a little bit about this, because it is a big factor, and it's really going to be up to you, as a person. How much money are you willing to actually set up and place into a brokerage account? And there's so many different ways I think people find ways to attain money, I should say. Whether it's you working, that 9-to-5 job, or working any type of, working for any type of employer-based company, whatever the case is. Or maybe you're employed yourself, and trading can be a second avenue, a second venture of income for you, a second means of income. But either way, let's just pick just one example. If you're working for someone, so which means you're working for an employer, and you're looking to maybe do something that's with your life. Maybe you reach that point where you say, and you have the passion, you have the drive, and you want to become financially have financial freedom, in a sense, meaning cut the ties, cut the chains, to being able to become your own boss and work at your own leisure, at your own time. Trading is not one of those things that you have to do all day long, but you have to use your mind constantly. If you ever hear about people getting burnt out or tired, trading takes a lot mentally from you, because it's a lot of emotions and psychological things that go on more than just a click of a button, because um, you are having to really analyze what's going on every um, piece of the way, in every stretch. You have to really know what's going on before you enter that trade. And because the worst thing, the thing about trading is that no one wants to lose money. You work too hard to build up a certain amount of money, whether it's savings, whatever the case is, to be able to do things with. And if you're taking a percentage of your capital, your money, and you put it into a brokerage account, that's money that you built up. That's money that you worked hard to obtain, and you don't want to see it go down the drain. So it's not like going to work and having a set task that you have to do, and you do it day in and day out, which is routine. And at the end of the week, you get a paycheck, whatever the case is. This is different, guys, because when you switch from going, say, full time, and you really start to go, part time to go full time, and everything's the weight's on your shoulders. Then it's all on your back. That's why I recommend people who are starting off trading to dabble with it, paper trade, sim trade, whatever the case is. Learn a strategy, learn how the markets move, learn market structure, learn everything. Meaning learn price action. Learn a strategy of how you're going to trade. And then when you get to that point to where you're ready to actually take that first trade live, which I don't recommend just doing a week after you say, oh, I've been trading a week or even a month, and my win to loss ratio is high. I mean, I have a high win ratio or rate, and I'm in the green every single day, whatever the case is. Once you go live, it's a totally different animal, okay, guys? Because psychologically, that piece of being able to trade when you're not trading, it's not actually live, doesn't bother you as much. I mean, even though you still have some kind of mental tie or connection to when you're maybe paper trading, because you trying to build up a confidence in yourself to be able to go live. But when you go live, that's when all the other psychological elements, like the fear and the greed piece, the two major things, really set in, and you'll be sitting there with that mouse in your hand. Your hands get real clammy, and you start sweating. I remember the very first time I started trading live, and what it felt like. It's just an intense rush. Nerves are your nerves are just going crazy. You're just sitting in your heart starts beating kind of fast. You don't want to lose money. That's the thing, because you work too hard for it, and especially if you only have but so much money, a little bit, but a certain amount of money to actually trade with, whatever the case is. So this is where I want to say that first of all, don't trade money that you don't have to trade. Okay, meaning money that you got to pay bills with. Do not do that. That's like going to Vegas and throwing, taking a stab and gambling, whatever the case is. You don't want to become a gambler when trading. You don't want to be gambling with money. You want to have money to the side to where, because trading is a business. Basic trading is it's just money flowing through through the economy, and different means of, through corporations, just through different things, guys. Money just flowing through the economy in different ways. And we're basically, as traders, just hedging or speculating what price is actually going to do, looking at our strategies, taking trades based on the strategies, and that's the whole game in a nutshell. That's the business side to it. So, trading is a business, and it's a great opportunity where people can make loads of money doing it. I am not a greedy person, so I don't let greed take control of me. So always have some type of goal set up in your mind daily once you start going live. And don't push it. Just leave it alone, because tomorrow's another day always. Whatever you made today, you can go back and make it tomorrow. So get your bearings in place before you start really, take that deep dive into starting to trade or whatever the case is. So don't trade with money that you have to pay bills with. That's a big no-no. A lot of people, at that point, you're gambling, and you get yourself into a situation to where you can't get yourself out of. And you hear stories of people who have blown their account several times, whatever the case is. And that's just typically because of the case of most people, excuse me, guys, just we're still trying to figure things out. One strategy didn't work. This strategy didn't work. That's because they were learning from so-called gurus that said, buy this strategy or buy this particular program. I'll teach you how to trade and become an overnight successful trader. There's no such thing as becoming an overnight successful trader, guys. It takes blood, sweat, and tears to get into this game and to stay in it for the long haul. for those that have felt like they wanted to get out of it, jump out of it because they lost tons of money and stayed in it, man, I take my hats off to you because, you know, it just shows how passionate you are about actually doing this, taking part in this business of trading. So, don't trade with money you don't have, guys. You know, I can't tell you how much of a percentage to have in savings, whatever case, or to the side, and then to tell you how much you should or would want to put into your brokerage account. I can't tell you those type of things because that's something personal. That's a personal side, a personal thing that you have to think about, that you may have to discuss with your significant other, your family, whatever the case is. And those are things that you really have to really think about. How much money am I willing to put on the line of risk? Because trading is risky. When you go to work, is it risky? It is. It can be risky, but there's more job security in going to work for an employer, for a company, versus you taking money and then just putting it into an account and really not knowing what's going to go on, because we aren't the powers to be when it comes to pushing and pulling the market as retail traders. I've said this in just about every one of my videos. We all we want, there's bigger beings, the gods of trading, if you want to call it, the institutions. They're the ones that push and pull the markets, and we just want to be able to be perfectionists or professionals like them and trade in the same mind frame that they trade in, okay? And just take some of the crumbs off the table. That's all we want to do. So you have to establish how much money are you willing to take out of savings, take up your own capital, and put into your brokerage account. So that's something you have to figure out yourself. You have to do the calculation and the factoring. How much money am I willing? If I took X amount of money out of my savings account and put it in my brokerage account, would I be fine and be okay with that if I was to lose that money? So don't ever be tied to the money that you're actually put into your brokerage account. Meaning, don't let it hit you, start pulling at your heartstrings, because it will mentally mess you up in the head. I've seen people who and heard it time and time again, people who have put a lot of money into an account, lost a lot of money, and I mean, it really took a toll on them for years, emotionally, psychologically. It took them time, long time, to get themselves back together. Okay, so let's talk a little bit about jumping from that, not that topic, we're still on the same topic, but jumping from that idea of things to looking more so what you need to have, and what your broker, whoever your broker may be. My broker may not be the broker that you're using, but the brokers are the one primarily that set set the day trading margins, pretty much. Okay, so whoever your broker is, okay. So we'll take a look at that, okay? Because every broker may be a little bit different. They may charge a few $100s more, a few $100s less, $100 less. I don't know. It depends on your broker, okay? And according to the markets that you may trade, when it comes to, there's all kind of future markets. You got the equity. You have the indices. I'm trying to say, guys, and then you have like, you have your grains, you have meats, you have metals. You have currencies. So there's so many different classes of futures that you can actually trade. So I like trading the indexes, the indices, or whatever the case may be. But we'll take a look at the margins here in a second, just for my broker, and I'll show you that. Okay, what's required. So you have to factor in, and looking at what the margin is that are set by the brokerage company, and understand that piece too, because it's going to play into everything that you're really going to need to know when it comes to placing money into your brokerage account, or how much money you should actually put into your brokerage account. Okay, so you first you have to figure out how much money am I willing to set aside to start trading with. Okay, that's the biggest thing. Then you have to figure out, do I have enough to trade whatever market that you want to trade, okay? When I first started off, I had a rule of thumb to where I wanted to have 4 to 5 times the amount, the margin set for me to trade per contract, pretty much, because these margins are set around a per contract basis, okay? So I'm gonna show you this, okay? Say for instance, I'll pull this over. And my brokerage company that I use is AMP Futures, which is a company, AMP Global. But and right now we're going to look at, I'm going to show you. Don't pay attention to the red numbers here because these are temporarily amended day trading margin requirements based on because of things that are going on in the economy. You know, probably more so things that are happening overseas and around the Europe area. You know, for Russia and the whole Ukraine thing. When we have things that are going on in the markets, guys, causing a lot of volatility in the markets, your broker will raise the margins as a safety measure. Okay, so typically, like with the ES, okay, here it is right here. It's like these are the stock indices, the equity indices or indexes right here. You have the Emini S&P 500, which is the ES. The day trading margin typically is $400 for the ES with AMP. Okay, I'm not saying go with AMP because, and if you use a NinjaTrader, what I do want to say is stop right here is that you can no longer use AMP with or use AMP as a broker when using the platform NinjaTrader. Okay, it's something they stopped many years ago, and I was only able to continue using them because I got grandfathered in because at that time when I started using AMP features years ago, they were offering, their brokerage services tied to anyone that was trading off the NinjaTrader platform. Okay, and you no longer can you use AMP. Okay, so I'm just showing you from my broker how much they actually charge. So with the ES, it's $400 a contract pretty much. So you have to have at least $400 to trade one contract. So here's the thing I wanted to kind of stress. Okay, so when I first started, my golden rule of thumb of what I use, and your scenario situation could be different. I said I wanted to have 4 or 5 the amount of money, to be able to put into my brokerage account. So if the Emini S&P 500, the ES margin was $400 a contract, I wanted to have 4 or 5 times that amount to put into my brokerage account because, if the market comes back against me or whatever the case is, I just don't want to be having to go back and put money back into my account if you were to blow your account. You put $400 in and you lose your money, whatever the case is. Like, once you go on below $400, you can't trade again. You have to go back and put more money in your account. Nobody wants to do that, because it's time consuming for one, having to continuously put money back into your account. So, it's, especially if you blow your account up, 4 or 5 times. Some people do that, I've heard that time and time again. But anyways, I have a golden rule of thumb to put aside at least 4 or 5 times the amount of whatever the margin is per contract. Pretty much what I'm trying to say. So if it's $400 a contract, then on the ES, then have between $1,600 to $2,000 set aside just to trade one contract. So what I'm trying to say is, so for every contract you trade, you want to have 4 or 5. To me, this is my rule: 4 or 5 times the amount of whatever that margin is set for that market. Say the ES here. So just to reiterate again, the ES day trading margin. I mean, this is the day trading margin. Maintenance margin is totally different. Maintenance margin is holding a trade overnight until the overnight session, whatever the case is. This is how much you have to have per contract to trade that particular market. Okay, and they probably raise these amounts right now because of just the possibility of high volatility in the markets, whatever the case is, as a safety net measure. Anyways, but like I was saying, $400 a contract. So when I was first starting out, I'd say I at least want $2,000 in my brokerage account to be able to trade one contract. Okay, all right. And if you trade the NQ, for instance, the margin it's $2,000 right now, but that's because it even says right here, February 24th, temporary minute day trading margin requirements highlighted in red. That's because of things that are going on right now. Typically with AMP futures, my broker, your broker may be a little different. It could be their margin rate could be a little bit higher, a little bit lower, not sure. But the NQ, which is the Emini Nasdaq, is $1,000 a contract. The Dow, $500 a contract. The Russell is $500 a contract as well. Right now, these are just the set margins because for the indices, just centered around because of everything that's going on globally. But so that's why I say, so if you trade in Nasdaq, say for instance, one contract, which is $1,000 a contract, you probably want to have between $4,000 and $5,000 a contract in your brokerage account, whatever the case is, and to trade one contract with. I'm not saying you can't trade 2 contracts with. If you have 2 contracts, then you're trading. That's basically you're tying up $2,000 of. If you trade on the Nasdaq, say for instance, you're tying up $2,000 of the money you may have in your account, which is $4,000 or $5,000, whatever the case is. So all I'm trying to say is the more contracts that you're actually going to trade. So if you got $5,000 in there, you're trying to trade the NASDAQ, you're trading 2 contracts, you're tying up $2,000 on that one trade. You see what I'm saying? You can lose that money pretty quick. If you're taking a major loss on the NASDAQ, then you may be below the set margin amount or rate amount to where you can't trade no more. So that's why it's build your account up. So start off with one contract, especially if you're a beginner. Put the right size margin amount in your account or money in your account. According to how much money I'm saying, me personally, like I said, $400 on the ES per contract, say for instance, right? So I would want to have at least maybe $2,000 in my account if I was trading just one contract on the ES. But you may want to have it could be a little higher than that because the ES tick value is a little higher, So the ES swings back against you. It's not like the NASDAQ to where you're losing $5 a tick. With the ES, you're losing $12.50 a tick. But the thing about it is that the NASDAQ swings a lot quicker than the ES does. So these are the reasons why I can't tell you particularly how much money you should the actual amount of money you should put into your brokerage account. But I'm just kind of giving you a golden rule of thumb or what the factor of how I factored how much money I told myself I was going to set aside to put in my brokerage account. And I was trading the ES. Actually, when I first started off, I was actually looking at the NASDAQ. But the NASDAQ margin back then wasn't $1,000. And that's what I'm trying to show you here. Brokers are different. Back when I started off, the NASDAQ margin, day trader margin, was only $500. Okay? So now they increased it $500. So the ES with the day trading margin, which with the broker I use, is $400. They haven't raised it since. So, but anyways, so I use a golden rule of thumb 4 or 5 times the amount, whatever the day trading margin is. So just remember that 4 or 5 times the amount, whatever the day trading margin is, to give yourself a buffer and not be having to go back and forth, put money into a brokerage account, whatever the case is, and trade one contract. So have 4 or 5 times the amount, whatever the margin is, per contract. That's what I'm trying to say. So if I was wanting to trade, say, 2 contracts on the ES, well, what would I want to have in my brokerage account? For me, this is me, okay? It's telling you what I would want to have in my account. I probably would want to have somewhere between $3,200 to let's see here, to $4,000, maybe $5,000 if I was trading 2 contracts on the ES. So just kind of give you, like I said, a buffer to where you have a little safety net in case the market comes back against you. But you got to know where you got the trade, because you don't want the market to come back against you to where you start losing money real quick. That's the purpose of even having a set or mental stop loss put in place. And I talk about my stops. And the reason why I don't put a hard stop in place, because I know that as soon as the market, I know what the institutions, what they do when price comes back to an area resistance or support. I know how the institutions are going to move them, primarily what they like to do. So just stop traders out and then turn the market back around. So that's all I want to talk about today was, I get that question time and time again. People asking that, how much money do I need to start trading? The Emini, the ES, pretty much, the Emini future market, the S&P 500. That's just my golden rule of thumb of passing along to you guys. But you guys come up with your own calculation as far as how much money that you feel like is. I'm not going to sit here and tell you how much money you should set aside to trade with. But that's just what I use. You can use the same thing, or you can. Some people would have different opinions. That's the thing about just us as traders. Everybody has a different opinion about the style, the strategy, the way each trader trades. Some people are gonna not agree with someone else's trading style, whatever the case is. Someone else may not agree with the information that you have to give, maybe to those that are looking to trade. So someone else may come and say that, no, I don't agree with what you're saying. I agree traders should have who are beginners should have X amount of money. It just depends. You have to, and no one should tell you how much money you should start off with. That's why I keep saying I can't tell you that. That's something that's a personal, confidential decision, opinion that you need to have and make it on your own. Because at the end of the day, you don't want to come back. I don't want to come back to me and say, well, you told me to go to put this much money in my account and now I lost it. That's the reason why. Okay, so you have to feel and be comfortable in your own skin, as far as how much skin you're looking to put in the game, how much money you're looking to put into the game. And I'm going to leave it right there, okay? So I appreciate everyone who's been following the channel, guys. If first time watching one of the videos and you haven't subbed or subscribed yet, please take the time to go ahead and subscribe to the channel. I definitely appreciate that. And for those who have subscribed, thank you for doing so and liking the videos. Make sure please make sure to hit that bell icon. Make sure if you haven't, you already subbed to the channel and you haven't hit that bell icon, post notification, go ahead and hit it. So that way you may be missing some of the uploads, and that way it will ensure that you never miss the uploads. Okay. Same thing for those who came across the video for the first time today. Hit that red button, that subscribe button. Make sure to hit that little bell icon, that post notification, to make sure that you just as well do not miss any of the uploads. Okay, I'll see you guys in tomorrow's video, where the recorded live video that I'll be posting tomorrow. And for all those looking to, if you're trading this evening, please be safe in the market, guys. Okay, I don't know what's going to happen when the market opens up. No one does. Okay, but just be careful. Okay, and be safe. See you guys in the next one.